Moving on with our project here, remember trading strategies that work, and this is the second part, dealing with the RSI, trading with the RSI, RSI being the relative strength index. While on the first part we showed how to install the relative strength index or the indicator on both the J4X and the MetaTrader platform. On this part, what I would like to do is to look at more examples on the standard interpretation, as the 70 being overbought and the 30 being oversold. However, like mentioned again, this is not working all the time. It is working, this strategy works, attention, when ranges are being identified. This is a ranging strategy. Selling the 70, buying the 30, or buying puts on 70, buying calls on 30. If you go back in time on the 1 hour chart, as you can see, price can stay here when price is trending. Like here you have a strong trend on the Euro US dollar 1 hour chart, so price is trending strongly, but the RSI here shows the 70 being overbought, but price still going to the upside. So in this instance, buying put options by the time price is going for the 70 is not going to work, or let's say it will work, but depending on your time frame. What I'm trying to say is that, again, this strategy is overbought and oversold strategy for any currency pair and for any time frames works by the time a range is being identified. Now, ranges can be found by looking at patterns, at consolidation patterns. So whenever you identify, regardless of the time frame, whenever you identify a contracting triangle, for example, or a flat, or another consolidation pattern, then looking to buy the ranges is the logical to buy and sell the ranges is the logical thing to do. Now, let's try to go, I don't know, on the 4 hour chart, on the 5 minute chart, for example, and see at the price section that we had last Friday. So this is the 5 minute chart and the price section on the last Friday. Let's try to find it out. All the way here, this was still with the holidays, and then we made the high 38.91, and this would be the last Friday, the last price section. And as you can see here, let me see, let's go on the 4 hour chart actually, and we'll try to identify a range. For example, here we have a nice, as you can see here, we have a nice contracting triangle of a lower degree, A, B, C, D, E. So this is a nice contracting triangle. So whenever you identify such a triangle, the logical thing to do is to go and buy put options when the oscillator comes into the overbought area, and buy call options when the oscillator comes into the oversold area. As you can see, a nice place to buy put option here was here, with the oscillator coming in the 70 area, and of course price doing this high too. Also, again, it goes on the 5 minute chart as well. Whenever you identify a possible consolidation area, again in the form of a triangle or a flat or a small zigzag or a leg of a contracting triangle on the 1 hour chart, then just going on the 5 minute chart and buying calls or puts based on the analysis on the hourly chart would be the logical thing to do. But again, this is only the first interpretation that we might have for the relative strength index. Now, this goes, and this is valid for any currency pair. If you go on the Great Britain pound US dollar, the same strategy goes for the Great Britain pound US dollar as well. Let me delete these ones because they're not valid here anymore. So the same strategy goes when you identify a specific range, like again like a triangle or something like that, then going on the lower time frames like the 5-minute chart and trying to buy the extremes, buy calls or buy put options here, for example. This is a nice contracting triangle. Now you may have early signs of contracting of triangular formation on the 1-hour chart, and the early signs are being given by flats, elongated flats of a lower degree, and stuff like that. And the same goes here. So by the time you are identifying this kind of a consolidation pattern, going on the lower time frames and looking for identifying that the time frame and looking to buy, see this is a triangle on the bigger time frames, and looking to buy put options when the RSI is oversold, okay? Put options when the RSI is oversold, and to buy call options when the RSI is oversold, sorry, and this was with our overbought, is the logical thing to do. So this would be a nice place to buy call options based on the RSI. Remember, we have a triangle there. This is another place to buy call options. This is another place to buy call options. So every time price is looking into this area, this is a nice place to buy put options, a nice place to buy call options based on the RSI, overbought and oversold, but only in ranges. Remember, when you identify a range, a contracting triangle ideally, or a flag, or bullish or a bearish flag. Now this is one way to use the relative strength index. Another way to use the relative strength index is, of course, the now famous divergence, and this would be the object of the next recording, looking how to trade the RSI or how to trade binary options with an RSI that is diverging and what a divergence means. Now, what would be the expiration dates to be used? Well, it depends very much on the time frame you are looking for. This triangle has been identified on the 1-hour chart, and based on the 1-hour chart you are going on the 5-minute chart and trade the binary options. Basically the 5-minute chart will give you the entry or the striking price for the option, and the expiration date will come also from the 5-minute chart, in the sense that you may even go for 30 minutes and even 1 hour or 2 hour expiration date based on if for example the consolidation pattern has been on the hourly chart. If the triangle comes from the daily chart, then by the time you are buying calls or puts, you are looking for even end of day expiration date and even end of week expiration date, depending on the moment of time during the trading week you have your analysis and your signal. Let's move on with the third part now on how to identify divergences using the RSI.